We take a question here concerning 3-column cash book. This is one of the source documents which is very critical as far as financial accounting is concerned. Now we go straight away to the question as it appears on the screen. It is from one of the past papers from KASNEB for Accounting Technician Diploma, ATD, and that is November 2018, question 1B. The following transactions were extracted from the books of our traders for the month of October 2018. Balance brought forward, we have cash in hand 392,500, cash at bank 635,000. The totals gives us 1,027,500, and that was a capital. Now let's see the transactions. Date 3 of October. Bought goods and paid by check shillings 102,500. Date 4. Purchased goods on credit from Kamata traders for shillings 145,000 less 10% trade discount. Date 7. Sold goods on credit to Muthe for shillings 225,500 less 20% trade discount. Date 9. Withdrew shillings 12,500 cash for personal use. Date 12. Sold goods to Casina for shillings 160,000 and received a check. Date 15. Paid shillings 125,000 by check to Kamata traders in full settlement of the debt. Date 18. Muthe returned goods worth shillings 10,000. Date 20th. Received cash amounting to shillings 100,000 from Muthe. 21st. Purchased goods on credit from Elo Limited valued at shillings 217,500. Date 23. Issued a check of shillings 150,000 to Hello Limited and received a discount of shillings 7,500. Date 24. Purchased furniture worth shillings 20,000 from Urembo Furniture Limited on credit. Date 26. Deposited shillings 55,000 from the cash in hand to the bank account. Date 28. Goods worth shillings 15,000 were returned to Hello Limited. Date 29. Paid wages in cash amounting to shillings 45,000 and issued a check of shillings 250,000 for advertisements. Date 30th, there were 2 transactions. Made cash sales of shillings 545,000. And the same date, banked shillings 500,000 from the cash in hand. Did that first, there were 2 transactions. Received shillings 47,500 in cash from Muthe and allowed a discount of shillings 2,500. And again on the same date, goods worth shillings 10,000 were taken for personal use. Required a duly balanced 3-column cash book. So that is your question then. That is your question. Now, we should note that in the cash book, we only record actual cash movements. Actual cash movements, that is, when cash has actually been received or cash has actually been paid. Again, we know that on the debit side of the cash book, which is the left hand side of the cash book, we record the money in, the money which we are receiving, or the receipts. On the credit side of the cash book, that is the right hand side, we record the money out. Again, we note that there is a difference between a 2-column cash book and a 3-column cash book. The difference between 3-column cash book and 2-column cash book is that a 2-column cash book does not have a column for discounts. However, for a 3-column cash book, there is a column for discount allowed on the debit side and discount received on the credit side. Now, let's have a solution for that particular question together. Now, see the format. You start by looking at the format now. You can see the format there. You start by writing the name of the business and the month which is covered. So, Howard Traders 3-column cash book for the month of October, 2018. Now, what is on the left hand side is known as the debit items, and what is on the credit side is known as the credit items. So money coming in should be recorded on the left hand side, and money going out should be recorded on the credit side, that is a credit side. Now again, you can note the difference. You can first check the format. Just check the format for the cash book. And you find that here you have date, details, cash, bank, then discount allowed. So up to that, this side is known as debit side. We record the money coming in. If we receive money by check, then we record on this bank column. If we receive money by cash, then we record on this column. So if there is a discount allowed, then it has to appear on this column. So from here, on this side, we record the money coming in. Then on the other side, in the same columns, date, details, cash, bank, the discount received. On that side, we record the money moving out, or the payments. So on the debit side, we record receipts, or the money coming in. On the credit side, we record the money out, or the payments. Date, details, cash. If we make payments by cash, we record on this column. If we make payments by check, we record on this column. If there is a discount received, then we record on this column. Now, note what we have said, that In the cash book, we record actual cash movement of cash. Therefore, if we purchase goods on credit, that transaction will not appear anywhere. But if we purchase goods and we pay cash or we pay by check, then that transaction has to appear in the cash book, because in the cash book we record actual cash movements. We record actual cash movements. Now let's start the solution for our question. Now note that we said that all assets have a debit balance. Increase in assets we debit, a decrease in assets we credit. All liabilities have credit balance. Increase in liabilities we credit, decrease in liabilities we debit. Capital has a credit balance. Increase in capital we credit, decrease in capital we debit. Expenses have a debit balance. Increase in expenses we debit, decrease in expenses we credit. Incomes have a credit balance. Increase in incomes we credit, a decrease in incomes we debit. Now this is a cash book, and in the cash book we have cash and bank. These are assets. Cash is an asset and bank balance is an asset. However, realize that if you are told you have bank overdraft, then the balance brought forward will be on the credit side, because a bank overdraft is a liability. In this case, or in this question, what we have, our opening balances. Now let's start from point 1. You can see here balance brought forward. These balances, you see, we are having transactions for October, for 1st October. Now the previous month was 30th September. So these balances are coming from the previous month. They were the closing balances for the previous month. So we want to open the month of October as at first. So bring down these balances. Our cash in hand is 392,500, and our cash at bank is 635,000. So you go to the debit side of your cash book, and then you write the date. You write date 1 October 2018, balance brought forward. These are opening balances. Balance brought forward. Cash column 392,500. Then go to the bank column 635,000. That's the starting point. Those figures, note that they should be on the debit side, because these are assets, and you say that assets have a debit balance. We say that assets have a debit balance. So you can see how these figures were treated in your cash book. So you wrote 1st October 2018, balance brought forward. These are opening balances coming from the previous month. Cash 392,500 and bank 635,000. So you have brought down these balances here. These are opening balances. You brought down your balances there. Okay, so that's the first thing. Let's move on. Note that we've said in the cash book we only record actual cash movement. So if transactions are on credit, then they will not appear in the cash book. We only record cash once received. Okay, let's go to the first transaction. The first transaction now. Go to the first transaction. Date 3. The first transaction is date 3. Bought goods and paid shillings 102,500. Date 3. Bought goods and paid. The first question we should ask yourself is, was there actual cash movement? Obviously, yes, because this is not a credit transaction. We bought and we paid. Then the next question we should ask yourself is this transaction on the credit side or on the debit side? On the debit side, which is also known as the left hand side, we record the money in. Then on the credit side, we usually record the money out. If it was cash, we use the cash column. If it was bank, we use the bank column. So, bought goods and paid. So obviously, this transaction will be on the credit side of the cash book because it is money out. And then we use the cash column because we paid by cash. So if that is what you can see here, that transaction is what you can see here. And these were purchases, bought goods and paid, 102,000. So you wrote date 3 of October, purchases, 102,500, we paid cash, then there was no discount, and you have recorded that. So we have recorded this transaction here. That is bought goods and paid by cash, shillings 102,500. So you can see here, very clear. It's money out, it's purchases. Purchases are those goods that are meant for resale. It's a purchase, you write the date, the details, it's purchases. We paid by cash 102,500, and then we are through that. We have recorded that. We go to date 4. Date 4, we are told purchased goods on credit from Kamata traders for shillings 145,000 less 10% trade discount. Now the first question again that we should ask yourself is, since we have said that in the cash book we only record actual cash movement, either when we receive cash or check, or when we pay check or cash. Is this transaction involving actual cash movement? Obviously, no. These purchases were on credit. Therefore, the transaction for date 4 will not appear in the cash book. It will not appear anywhere. We have purchased goods, but we are to pay in the future. So that date when we will be paying, that is when that transaction will be recorded on the credit side of the cash book when we pay in the future. When we pay in the future, we will credit our cash book. However, here on date 4, we have purchased goods on credit from Kamata traders. This is not actual cash movement. The actual cash movement will take place in the future. So in the future, that is when we will be paying for these particular goods, that is when we will record that transaction in the cash book. But date 4, there is no actual cash movement, so it will not appear anywhere in the cash book for now. Go to date 7. Sold goods on credit to Mudhe for shillings 222,500 less 20% trade discount. The question here is this, do we have actual cash movement of goods? The answer, the actual cash movement of cash, in other words. This is a credit transaction. In the cash book, we only record actual cash movement. So here, if we sold goods on credit to Mudhe for shillings 222,500 less 20% discount, trade discount, then obviously there is no actual cash movement. We will receive that money from that data in the future. So in the future, when we receive that money from Mudhe, who is our data, that is when we will record that transaction on the debit side of the cash book. But as at date 7, that transaction should not appear in the cash book. Date 9, withdrew shillings 12,000, withdrew shillings 12,500 cash for personal use. This is known as drawings. These are known as drawings. Now, withdraw shillings 12,500 cash for personal use. The first question is this transaction involving actual cash movement? The answer is yes. There is money out. And we can just check from this date 9, withdrawing 12,500 cash for personal use. So there is money moving out. There is money moving out. Money is moving out. So you go on the credit side of your cash book, you write drawings. It was cash, it's money out. 12,500. So you write date 9, you write drawings 12,500. Drawings 12,500. You can see it is on the credit side. This side is known as a credit side. We record on this side the money out. We record the money out on that side. And it was a cash transaction. So it has to appear in the cash column. We move to date 12. Sold goods to Kasina for shillings 160,000 and received a check. Okay, the first question again that you should ask yourself is this actual cash movement? The answer is yes. Sold goods to Kasina is a customer. So we are receiving money in. We have received 160,000, but this amount is in form of a check. So checks usually go to the bank. So because it is money in, we have to debit our cash book. We record that transaction on the debit side of the cash book, or the left hand side of the cash book. Sold goods to Kasina for shillings 160,000 and received a check of shillings 160,000. So you can see what you recorded here. You just said sales. 12th October, sales. It was not a cash. The payment was made by a check, 160,000. So you received 160,000. So this transaction here for date 12, that's how it's supposed to be recorded. Sold goods. If you make sales, then you receive either cash or check, and then that has to go on the debit side. Okay, we have that. The 160,000, you can see where it is appearing is a sale. When that sale, and the payment is by check. So sold goods to Kasina for shillings 160,000 and received a check. Date 15. Paid shillings 125,000 by check to Kamata traders in full settlement of the debt. Paid shillings 125,000. Now, is paying to who? Is paying to Kamata. Now, still again, you can see is the transaction for date 4. If you look at date 4, we had purchased goods on credit from Kamata traders for shillings 145,000 less 10% discount. So we said for date 4, that transaction was not to appear in the cash book because as at that date, there was no actual cash movement. Now, come date 15th, we paid shillings 125,000 by check to Kamata traders in full settlement of the debt. So this is money out. So we have to record that on the credit side of the cash book, and we use the bank column because you are paying by check. So right here, now note that we were supposed to pay Kamata 145,000. 145,000. However, we are being told the 125,000, we are to pay Kamata 145,000. But on this date, 15, when we paid 125,000 to Kamata, is for full settlement of the debt. So why are we not paying him 145,000? Why are we paying 125,000? It's because of discount. So there's a discount of 25,000 because if you earn 20,000, that is it 20,000 or 125,000? There is a discount of 20,000 because we had to pay him 145,000. But you are saying we pay him 125,000 in full settlement. So we are making full settlement even though the debt is at 145,000. So the difference represents a discount of 20,000. So is money out? We are paying Kamata. Date 15 October. Kamata, we are paying by check. We paid him 125,000, even though we are supposed to pay him 145,000, but we are saying we pay him 125,000 in full settlement. So the difference of 20,000 to make it 145 represents discount received. So bank column, you put 125,000 and discount received of 20,000. We move to date, so that was date 15. We go to date 18. Mudhe return goods worth shillings 10,000. Mudhe return goods worth shillings 10,000. Now that one does not involve. Does not involve any cash movement. These are just return inwards. Return inwards do not appear. Return inwards do not appear in the cash book. Return inwards do not appear in the cash book. In the cash book, we only record actual movement of cash, either money in or money out. So Mudhe date 18, whereby you are told Mudhe return goods worth shillings 10,000, that should not appear in the cash book. Date 20th, received cash amounting to shillings 100,000 from Mudhe. So obviously, this is actual cash movement and it is a money in. Receipts are recorded on the debit side, that is the left-hand side of the cash book. So we are receiving cash, which is 100,000 from Mudhe, and you can see from here, you write 20th October, the money is coming from Mudhe. It was a cash figure, 100,000, and you are through that. So for date 20th, you just recorded on the debit side of the cash book, the cash column. Received a cash amounting to shillings 100,000 from Mudhe. Received cash amounting to shillings 100,000 from there. And we have that. We have three that. Date 21st, purchased goods on credit from LO Limited valued at shillings 217,500. Now, we say that in the cash book, we record actual cash movement. In this case, there is no actual cash movement because this transaction is on credit. It will not appear anywhere in the cash book as far as date 21st of October is concerned. But in the future, because we'll have to pay for these goods, when we pay for these goods in the future, that is when we record that transaction on the credit side of the cash book. Okay, so date 21st will not appear anywhere in the cash book. That transaction for date 21st will not appear anywhere in the cash book. Date 23, issued a check of shillings 150,000 to LO Limited and received a discount of shillings 7,500. Issued a check, so therefore what means is that we are paying this man out. So that figure has to appear on the credit side, is man out. There is actual movement of money, which is in form of check. So date 23 of October, we are saying issued a check of shillings 150,000 to LO Limited and received a discount of shillings 7,500. Is man out? The transaction has to go to the credit side, the credit side of the cash book. Check 150,000, and there was a discount received of 7,500. Okay, so we are through that. We move on to the next date. So after date 23, we go to date 24. Purchased furniture worth shillings 20,000 from Urembo Furniture Limited on credit. This is a credit transaction, therefore, there is no actual cash movement. As far as date 24 is concerned, that transaction should not appear in the cash book. It does not involve actual cash movement. But in the future, we'll have to pay Urembo Furniture Limited. So when we pay Urembo Furniture Limited in the future, that is when that transaction will be recorded on the credit side of the cash book. All right, so date 24th, that transaction will not appear in the cash book. The reason being that it is a transaction which does not involve actual cash movement. You go to date 26th. Deposited shillings 55,000 from the cash in hand to the bank account. Now this is known as contra entry or set off. You take money from cash and you take it to the bank. So generally speaking, your money is neither increasing or decreasing. It's only that you have taken your cash to the bank. It's a contra entry. So you ask yourselves, this money was taken from cash. We take cash, so our cash is reducing. So that is why if you look at our cash book here, you can see we write 55,000. We have taken cash, so our cash has reduced. Man out. This is man out. We've taken 55,000. We take 55,000 and we bring it to the bank, this column. So this side is increasing. Note that the debit side of cash book is about money in, and the credit side of the cash book is always about money out. So when we take cash and we deposit the same cash in the bank, the implication is that our cash has reduced. We do not have cash with us in the cash till. However, the same cash increases the bank by the same amount. And we have said this is known as contra entry. This is known as contra entry. So you write here bank 55,000, meaning the 55,000 has been taken to the bank. 55,000, then you bring it here. 55,000, you record it here. And then you write here under the details cash. That is, the money was coming from cash. So you can see the bank column is increasing by 55,000 and the money is coming from the bank. And this is known as contra entry. We move to a different date, and that is date 28th. Goods worth shillings 15,000 were returned to ELO Limited. Goods worth shillings 15,000 were returned to ELO Limited. What does it mean? Is there actual cash movement? That's the first question. Do we have actual cash movement? There is no actual cash movement there. These are just return outwards, which are also known as purchases returns. You return the goods to the supplier. There is no movement of cash. So that one does not need to not appear simply in the cash book. So date 28th, that transaction will not appear in the cash book. 29th, paid wages in cash amounting to shillings 45,000 and issued a check of shillings 250,000 for advertisements. Now, the first question that we should ask ourselves is there actual cash movement? The answer is yes, because you have paid wages in cash. So that will appear on the credit side of the cash book. That is the right hand side of the cash book under the cash column for 5,000. As you can see it here, wages for 5,000. And then we paid 250,000 for advertisement, but this was meant by check. So you can see adverts here or advertisements. The figure is on the bank column, the 250,000 for advertisements. Date 29th, paid wages in cash. So this money out. There is actual cash movement. When we pay wages in cash, there is money moving out. There is money moving out. There is money moving out. Now, so that's that particular date. There is money moving out. So wages, 45 wages. We have 45,000. We paid for wages 44,000, and then advertisement we paid 250,000 by check. 250,000. So go to date 30th. Main cash sales of shillings 545,000. Cash sales. So this is money in. If you make sales and you are paid by cash, then that is money in. So it has to appear on the debit side of the cash book. So 30th October, sales of 545,000. So we are told meant cash sales of shillings 545,000. So you can see it on the debit side. On the debit side of the cash book, 545,000 cash sales. There is this cash sales. It entails actual cash movement. There is actual cash movement, which is a cash transaction, which is on the debit side. Date 30th, the same date, banked shillings 500,000 from the cash in hand. That is also the same as contra entry or set off. We take our cash, we deposit it in the bank. It's a contra entry. Bank shillings 500,000. So our cash is reducing. You can see here, our cash, you go on the credit side of the cash book, the cash, you write this 500,000, the details you write bank. We took 500,000 and then we deposited it here, the bank. You write the same date, 500,000. 500,000. I think you can see that. Okay. So we have that as a contra entry. If you take money which was in the cash till and then you deposit that money in the bank, that is known as contra entry. That is known as contra entry. And that is what was happening here. The 30th October. Banked shillings 500,000 from the cash in hand. From cash in hand. So we are taking this cash, 500,000. You deposit it here in the bank. The details you write cash, because this 500,000 was coming from cash. Date that first. Received shillings 47,500 in cash from Mudhe and allowed a discount of shillings 2,500. We are receiving some amount, and that is money out. The money in other words. We are receiving money, so there is money in. Okay, so it was a cash figure. Received 47,500, but there was a discount. There was a discount of 2,500. There is a discount. There's a discount of 2,500. So that's a discount allowed. So discount allowed is to do with sales, and discount received is to do with purchases. And discount allowed is always on the debit side of the 3-column cash book because it is an expense. Discount received is to do with purchases. It is on the credit side of the 3-column cash book because it represents an income. We are paying less, in other words. So if we are paying our suppliers a lesser figure, we are saving the difference, and that becomes an income. For discount allowed, we are making sales to customers, and then when we grant them discount, those customers are paying a lesser figure. So we are receiving a lesser figure. So to us as a business, it's an expense. Then we have the last transaction. That first, goods worth shillings 10,000 were taken for personal use. Now that one does not involve cash transaction. So the last statement, goods worth shillings 10,000 were taken for personal use. Now that one does not involve cash, so it will not appear anywhere. Now once you have done that, so we have recorded all our transactions. If you look at your question there, if you try to analyze your question, you realize that On the debit side, on the debit side, on the debit side, you record, that is this, the debit side of the cash book. If you take the debit side, if you take the debit side of the cash book, what you record, debit side means this side, up to there, that side which is on the left hand side. The left hand side is known as debit side. Debit side. So let me write it for you. I can write that one for you. This is called debit side, or money in. Money in. So it is up to here. Up to here. So that side is known as the debit side. It's where you record money in. Then the other side is known as credit side. This side is known as credit side. It's for money out. Money out. That's where you record money out. Now depends on, are you paying by check, or are you paying by check, or are you paying by cash? So if you are paying, by check, if you are paying by cash, if you are paying by cash, if you are receiving money by cash, you record that transaction here. If you are receiving money by check, you record that transaction here. If there was a discount, you record that discount here. This is called the debit side of the cash book. Then on the other side, this is called the credit side of the cash book. It records money out. If you pay by cash, you record in this column. If you pay by check, you record in this column. If there was a discount received, then you record in this column. So important things that we should realize when dealing with 3-column cash book is that, number one, in the cash book, we record actual cash movement. We record actual cash movement. If a transaction is on credit basis, then it will not be recorded in the cash book. We only record transactions in the cash book if those transactions are on cash basis. Money in, if we receive money, we debit that transaction. If we pay money, we record that transaction on the credit side. Also, consider whether you are paying or you are receiving by cash, or you are paying or receiving that money by check. That's important thing. Another important thing when dealing with the cash book is that all the money in should appear on the debit side. That is the left hand side. All the money out should appear on the credit side, or the right hand side. Those are important things to note. Now, once you have done that, again, the balance brought forward in the cash book, the balance brought forward, that is the opening balance, should be on the debit side. Not unless for the bank, if you are told there was a bank overdraft. Not unless you have been told there was a bank overdraft. If there is a bank overdraft, then the balance brought forward will be on the credit side. If, for example, in this question, if you had been told this 365,000 was bank overdraft, this balance could have been written here. You could have written here, 1st October, you write balance brought forward, this bank 635 could have been here. So anytime you are given bank overdraft in the cash book, it will appear on the credit side of the cash book. The credit side of the cash book. Okay. Now, once you have entered all the entries in your cash book, the other thing is to balance now your cash book. Now, balancing your cash book means you go to the cash column, sum up all these numbers, and you also sum up all these numbers on the credit side of the cash book. Then establish the difference between the two. Take the balance carried down on the side with the small figure. Okay, what I mean is that we want to establish what is the balance carried down for our cash book. Cash. So take 392,500 plus 100,000 plus 45,000 plus 47,500. You get 1,085,000. So this is the totals for cash. Total cash on the debit side. Then on the credit side, you do the same. You add all this. 102,500 plus 12,500 plus 55,000 plus 45,000 plus 500,000. You get 715,000. Now compare 1,085,000. You compare with 715,000. So establish the side with the small figure. The side with the small figure is the credit side, because the credit side has 715,000. The debit side has 1,085,000. So the difference between 1085,000, so in other words, you take 1085,000 minus 715,000. The difference is known as balance carried down, which is 370,000. So you write that balance carried down there, the 370,000. So that if you take 370,000 plus 715,000, you get 1085,000. So you have simply taken the total cash on the debit side, you compare with the total cash on the credit side, then the difference between the two. The difference between the two. That difference, you take it on the side with the small figure, and you call that balance carried down. As we have done here, we have entered all these figures here to get 1085,000. Then we entered all this to get 715,000. We can see the side with the small figure is this side. It has 715,000. If you take 1085,000 minus 715,000, you get 370,000, and you refer to that as balance carried down. Then you go to the bank. You take summation. You sum up all the numbers on the debit side: 635,000 plus 160,000 plus 55,000 plus 500,000. We get 1,350,000. Sum up these numbers, one on the credit side, the bank column, 125,000 plus 150,000 plus 250,000, we get 525,000. So you compare this figure, 1,350,000, you compare with 525,000. So this side has a smaller amount, comparing 1,350,000 with 525,000. So the difference, by taking 1,350,000 minus 525,000, we get 825,000, and you refer to that as balance carried down. You refer to that as balance carried down. Now the balance carried down becomes the balance brought forward for the next period. And that is why you can see here we have written 1st November, balance brought forward. So when you start next month, the cash balance brought forward will be 370,000, but it will be on the debit side because the balance carried down are on the credit side. So cash balance brought forward 370,000. This amount here will be the opening balance, and then for the bank, 825,000. This figure here, the opening balance. So when you start the month of November, the opening balances, which will be on the debit side, will be 370,000 for cash and 825,000 for the bank. And that is our cash book. That is our three column cash book. That is our 3-column cash book. So you can just look at your question. You can just look at your question. You can just go through your question once again, and then you can just go through your question once again from where you have the opening balances of cash in hand and cash at bank, then date 3, all the transactions have been given there. From date 3 all the way to that 1st of October, there are several transactions there, some on cash basis, others on credit basis. We said in the cash book, we record transactions which entail actual cash movement. So any transaction which is on credit should not appear in the cash book. In the cash book, you only record transactions which are on which involve actual cash movement. If the transaction involves money in, we record that transaction on the debit side. Debit side records money in or receipts, the money coming in. The debit side of the cash book is also known as the receipts. The receipts side, we record the money coming in, putting in mind whether the payment was on cash basis, that is the receipt was on cash basis, or was by check. If we receive money by cash, we record it on the debit side, the cash column. If we receive a check, a payment, we receive a check, and then we have to record that on the debit side, the bank column. Then the credit side, you record money out. If we pay cash, we credit the cash column. If we pay by check, we credit the bank column. So just you can just go through your question. Just go through your question, and then you should be able to analyze your question well. So by the end of the day, you should be able to get what we have gotten down there. So that is the end of that. Now, if you need this book for revision, that's Introduction to Financial Accounting, which is ATD. My contacts are there. You need revision books for financial accounting and other books for accounts. My number is just down there, 0727 87 10 93. So this question is, you get it in page 24. Is in page 24. That's where we have taken it from, and is for November 2018. So remember to subscribe for YouTube, so that you can get updates as and when we upload these videos. So that is enough for today. So we'll take more questions about source documents, among others. So like our video, subscribe, and you make a comment. In case you need any assistance, our numbers are just down there. So that's enough for today. We meet again.